The local currency slid back below US 73 cent. The Bloomberg Dollar Spot Index was little changed in New York. Bitcoin was trading near $38,500 near 8:30 a.m. Australian Eastern Daylight Time on bitstamp.net. The yield on the US 10-year note rose 6 basis points to 1.84% at 4:30 p.m. in New York. Germany's equivalent leapt 13 basis points to 0.11%. On Wall Street, shares ended lower after swinging wildly through the session. The VIX fell more than 9%. Nickel prices more than doubled on Tuesday, forcing the London Metal Exchange to halt trading in the metal. The LME also announced that all trades will be voided from midnight until 8:15 a.m. on Tuesday, when trading stopped, and added that it was considering a closure of several days. LME 3-month nickel was up 66% at $80,000 a ton when trading was stopped, having earlier been driven to a record $101,365. Three sources told China's Tsingshan Holding Group was forced to cover short positions as prices rallied on worries over supply delays and logistics headaches resulting from Russia's invasion of Ukraine. "This market is absolutely insane," said ING senior commodities strategist Wenyu Yao. "The fundamentals alone won't be able to explain these prices." By 17:15 GMT, zinc was up 1% at $4,157. Lead rose 2% to $2,497. Tin climbed 4% to $49,449, and copper was 0.7% down at $10,207. Aluminium sank 7.6% to $3,456 after hitting record of $40,734.50 in the previous session. Today's agenda. Local. RBA Governor Philip Lowe will speak at 9:20 a.m. Australian Eastern Daylight Time at the Australian Financial Review Business Summit. March Consumer Confidence at 10:30 a.m. Guy Debelle, RBA Deputy Governor, will be on a panel at the Economic Implications of the Digital Economy Conference in Sydney at 7 p.m. Overseas data. China February producer and consumer prices. Japan final fourth quarter GDP. Market highlights. ASX futures up 5 points, or 0.1% to 6,949, near 8 a.m. Australian Eastern Daylight Time. AUD minus 0.7% to 72.69 US cents. Bitcoin on bitstamp.net plus 2% to $38,539.69 US, as of 8:30 a.m. Australian Eastern Daylight Time. On Wall St. Dow minus 0.6% S&P 500 to 0.7%, Nasdaq minus 0.3%. 9 of the S&P 500's 11 industry groups fell. In New York, BHP minus 0.9%, Rio minus 2.5%, Atlassian minus 1.4%. Tesla plus 2.5%, Apple minus 1.2%, Meta plus 1.5%, Netflix minus 2.4%. In Europe, Stocks 50 to 0.2%, FTSE plus 0.1%, CAC minus 0.3%, DAX minus 0.02%. Spot gold plus 1.6% to $2,029.17 per ounce at 1:14 p.m. New York time. Brent crude plus 2.7% to $126.51 a barrel. US oil plus 2.2% to $122.06 a barrel. Iron ore minus 0.3% to $162.25 a ton. 2-year yield, US 1.60%, Australia 1.18%. 5-year yield, US 1.77%, Australia 1.93%. 10-year yield, US 1.84%, Australia 2.22%, Germany 0.11%. US prices as of 4:30 p.m. in New York. From today's financial review: how Australia must cope with the new age of uncertainty. Leading CEOs say the world is facing a pivotal historical moment characterized by geopolitical uncertainty, a retreat from globalization, higher inflation, and lower returns. Twiggy signs deal with Airbus to back hydrogen planes. The two will collaborate on R&D as Airbus tries to build a hydrogen-powered aircraft and to persuade airports and airlines to get on board. Why wild commodity price swings are making investors nervous. Investors are increasingly on edge as they see the wild swings in commodity prices as evidence that some big players in the commodity markets are facing hefty margin calls. United States: Google is buying cybersecurity firm Mandiant for $5.4 billion in a deal that could trigger a ripple effect as cloud rivals Microsoft and Amazon also ramp up efforts to fortify the fast-growing business. The head of markets for JP Morgan Chase & Co. said that markets are too treacherous to update the firm's first quarter outlook for trading revenue. The markets are extremely treacherous at the moment, Troy Rohrbaugh explained at an investor conference. There is a lot of uncertainty. There are a lot of clients that are under extreme stress. That creates potentially very significant counterparty risk exposure. Boeing said it had delivered 20 of its 737 MAX narrowbodies and 2 freighters to aviation customers in February, reflecting rebounding travel and COVID-era cargo demand. But its 787 Dreamliner freeze continued. European shares slipped on Tuesday as the United States banned Russian oil imports, raising volatility and fears of global stagflation, and offsetting a recovery in financial stocks. The region-wide Stoxx 600 index ended a choppy session down 0.5% with technology, healthcare, and the materials sector weighing. London's FTSE and the German DAX were flat, while the bank-heavy indices of Spain and Italy outperformed, rising 1.8% and 0.8%, respectively. Germany's DAX and Italy's MIB were confirmed as being in a bear market, or a decline of 20% or more from the most recent closing highs, on the prospect of a Russian oil import ban. The Stoxx 600 is down almost 15% so far this year, slipping from January's record highs as the Ukraine crisis has escalated. If there is a further escalation in terms of sanctions, and you have an actual stopping in physical supply of gas to Europe, you can even be faced with rolling blackouts in the industrial sector, said Davide Oneglia, senior economist at TS Lombard. Eurozone banks closed 2.5% higher after hitting a one-year low in the previous session. Asia: China and Hong Kong stocks extended losses to close lower on Tuesday after hitting multi-year troughs in the previous session, as little progress in Ukraine talks, inflation worries, and domestic coronavirus outbreaks weighed on markets. The blue-chip CSI 300 index ended 2.0% lower at 4,265.39, the lowest since July 1, 2020. The Shanghai Composite Index lost 2.4% to 3,293.53, the lowest since November 4, 2020. The Hang Seng Index fell 1.4% to 20,765.87, the lowest since July 8, 2016. The China Enterprises Index lost 2.4% to 7,237.80, the lowest since March 12, 2009. The Hang Seng Tech Index extended losses by February 3% to a new low, while Alibaba edged up 0.9%. Currencies. The European Union is discussing a plan to jointly issue bonds on a potentially massive scale to finance energy and defense spending as the bloc copes with the fallout from Russia's invasion of Ukraine, Bloomberg reported. The proposal may be presented after the EU's leaders hold an informal summit in Versailles, France, that starts on Thursday, according to officials familiar with the preparations. Officials are still working out the details on how the debt sales would work and how much money they intend to raise, depending on the guidance they receive from leaders in this week's meeting. The spread between 10-year Italian and German yields A key gauge of risk in the region tightened 11 basis points to around